My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, Bob Mortgage Nation? This is the 67th episode of the Mortgage Report. That's right, the 67th episode. Now, I've been doing that for 67 straight weeks. And what I'm doing with this Mortgage Report is giving you insight into what happened the previous week into the markets, what I feel is happening this upcoming week, and giving you my lock or float positions. Now, it's my lock or float position for the week. So what I'd ask you to do is go check me out on Instagram and follow me. Just go to Instagram/BobMortgage, and in the stories, I'm going to give you some daily feedback, because sometimes I may go into a week carefully floating, but because of some market-related news that's coming up, I'll convert from a floating position to a locking position. And I think that's going to be some news that you guys want to pick up and hear. So go to Instagram/BobMortgage, follow me, and you'll get some more detailed information on a daily basis as the markets are changing. So speaking of the markets, let's take a look at some market-related news. All right, inflation remained at 2.2%, which was lower than the 2.3% expected. Home price appreciation continued to be solid. We had a 6.4% annual gain in May. The jobs report, now that came out on Friday. 157,000 jobs were created, which was weaker than expectations of 190,000 jobs. Unemployment rate dropped from 4% to 3.9%, which is the lowest we've seen since May. And average hourly earnings, now this is a year-over-year rate, remained unchanged at 2.7%, and we're in line with estimates. So how does all this kind of impact the bond market? So as you can see on Friday at close, we're sitting at roughly 101.67 basis points, which is higher than where we started out the week on Monday. Now, Monday, I went into the market sitting at about 101.5 basis points, and I said if the market changes and goes below that 101.5, I'm going to convert to a locking position, and that's what happened. On last week, Monday, we went below the 101.5, and I converted from a floating position to a locking position, which was a good decision, because as you can see here, we stayed below 101.5 from end of day Monday all the way through pretty much today, or yesterday, Friday, and that's when we started to pick up some gains based on these jobs report numbers being weaker than expected, and we closed up. So what I did was any new clients that I had on Friday that had new contracts, I went ahead and locked those in, because look, at the end of the day, what I'm seeing is we have so much downside risk to our bond market. We're all the way down here still at 101.243 or 234 is our floor of support. But we have so much more resistance on the top side with the 25-day, the 50-day, and the 100-day moving average. And it's just going to be too hard right now to break above those levels. As bond prices rise, interest rates go down. I don't see a big rise, especially next week, or this coming week actually, since I'm recording this on Friday, this coming week, because it's a pretty quiet economic news week. I just see more downside risk. So I wanted to lock in and protect those that got contracts today. Now what I'll do is I'll go into the weekend floating. We'll wait and see what happens on Monday with some of the market-related news. Something's going to have to change for us to get any movement up or down. So I really do still feel as if we're going to continue in this sideways trading range that we've pretty much been in since July 23rd. Look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. I work daily to watch the markets to make sure I can get you the right home loan at the right price. With Bob Mortgage, your dream loan is already within your reach.